kids and stuff like that. So probably taking care of the little ones this morning and pretty much this week. So I'm not surprised. I'm waiting for YouTube to start up here. Kids and stuff like that. Okay, perfect. All right, how was you guys this weekend? Everything good? Last week was good. I know we missed out last week, and I'm going to tell you why. You guys are gonna, you may not, I mean, you're gonna believe me, but it's still pretty outrageous. So, we basically we got our new, we pay our mortgage obviously, right, on our primary residence. We never do anything to our insurance or make any claims or anything like that. We keep it as is. Any repairs that we need to make, we do it on our own pretty much. And not last week, the week before. Last week was when I did the inspection. The week before, I just happened to look at the mortgage statement. I don't even know why, because I don't get notifications. I just pay it. And I saw that our insurance, or that our escrow, sorry, was negative $10,000. And I'm like, what the hell? What did the taxes go up? Like, what happened here? And I look, and we got new insurance, not Forced Place. They renewed our insurance. People's Trust is the insurance, or People's Choice Trust. They renewed our insurance, and our insurance for this year is $16,000. $16,000. That's more than $1,000
OMG.
on just insurance. Yes. So I said, no, not happening. We have hurricane impact windows and doors. Granted, we just got them, and it wasn't part of our insurance, but we never made any claims, or we haven't made claims in like 6 years, I would say. And yeah, they just straight up tried to destroy us. And so my worry, for the most part, because I'm already getting the new insurance. We've got to close out this current insurance by the 22nd. That would give us a full month of having this the $16,000 insurance. My concern is more so getting this done as soon as possible, because next month they're going to hit us for not only the escrow shortage, but also the new insurance. So that bill is going to be like an extra $2,000 a month. And that's me. Now think about other people with just regular everyday jobs. Like, I think the insurance crisis down here, and I'm glad that the government's trying to do something about insurance down in Florida, and they're going to be adding on different types of insurance down here within the next couple of years. But yeah, I mean, there's really only 2 or 3 insurance carriers that work down here right now. It's Citizens, it's People's Choice, and it's Tower Hill. So there's very, very few selections, and they're beating people up pretty bad on their renewals on their claims. I mean, on the renewals on their insurance. So last Monday I had the full point in the wind mid, so that's why I was pretty much. It was early in the morning, but I didn't get into a little bit later. Trying to get that thing situated. But yeah, our new insurance is back down to what it was before, which is about $6,000. So it's still really high, especially with everything that with all the discounts that we get, because the inspector told me you basically get full discount here. I think it's just our location where we live, and they told us it's relatively pretty high insurance. But yeah, $16,000. I'm scared to see that bill next month, because I'm pretty sure I'm going to have to pay at least 1 month of that other payment. I'm hoping I don't, but we'll see. We'll see how it goes. So let me pull up the news here. So the consumer price index came in at 0.4% in February, and the annual reading declined from 6.4% to 6%. A big part is the lagging shelter costs, which I mentioned before. That's going to be more favorable for us by May's reading, which is about 2 months away. Okay, so remember that we're still right now comparing against the quote unquote good times. Stuff didn't really start to hit the fan when the Fed stopped buying mortgage-backed securities or bonds in general and just started letting them roll off of their balance sheet, which was last April. So, and we won't get last April's reading until May, which is why typically that May date is so important for a lot of people in terms of what the data looks like, so that we can compare like actual apples to apples. But to be honest though, and I was writing this up and then I looked at some articles after and I'm like, yeah, it's kind of true. We're seeing bonds already come down with the news of the collapse of the Silicon Valley Bank. And now over the weekend, Credit Suisse, which is another huge bank, they sold for about 80% less than what they were worth on Friday over the weekend. So they had a little, I believe it was like a little charity event party where they were trying to come up with money for basically to save them, and they couldn't come up with enough, and they sold for about $2 billion. And I think they were worth about 10 or 11 at the close of Friday. So basically about 27 cents a share is what I saw that they got bought for. And bonds are going to come down for that, right? Let's talk about either what's going to help us more, the favorable data, or basically showing that we're really getting into a recession that's going to be pretty severe. A lot of people are saying, and I'm going to just take it in terms of the way that we kind of see these things coming, or as they come. But they're saying that it's going to be just as bad as basically like they passed 07. They said like 19. I think it was the recession of 1942, where basically the banks collapsed, or 1924. Maybe my dyslexia, but one of the two, where the banks collapsed. So for those of you that aren't aware, banks are just investment vehicles, right? You have your money in there, and you may see it on your mobile app, but that money isn't physically there, right? They don't have it in a bank vault. Or even digitally. What they do is they put that and they invest it, and they promise you some sort of very minimal return, right? We see it 0.1% a year and stuff like that. They're just investment vehicles, and they're only required to have a certain percentage of the money that they get from their clients or investors actually available, which is about 10%, kind of like association reserves, right? 10% is that number. And the problem comes when fear spikes, and like it did with SVB, and a bunch of their investors, clients tried to pull out money at the same time. They didn't have enough funds available to keep up with the withdrawal requests, and they've since filed for bankruptcy. So that's kind of what happened. I know that you guys have seen the news. If you haven't really read up on it, it's basically they had a bunch of withdrawal requests from a bunch of big investors and clients that they had, and they just didn't have the amount of money available to be able to give it to them. And that's happened before in the past. And that's kind of what's happening with Credit Suisse as well. This news is big in the sense that while the Fed was doing what we call quantitative tightening, where they're raising the Fed funds rate and they're not buying any bonds, and in fact, letting them roll off of their balance sheet, these huge banks are now feeling the pain. So what are people suspecting? For the Fed to reverse course and start what they've been doing for the past 10 years, which is quantitative easing. Basically, we saw that big in 2020, 2021 because of how much money they pumped into the economy, but they've been doing that since I would say I think it was like 2011, 2012 is when they started the quantitative easing and basically borrowing against themselves. And we can speak for hours about the repercussions of quantitative easing as well, but just to give you guys a heads up in terms of what rates look like with this news coming out, and with these banks pretty much failing because of that Fed funds rate increasing at such a rapid rate, what happens is those investors take out their money. They want to invest it maybe into U.S. bonds because the returns on the 2-year were like at 4%, 4.5%, right? So they may take out that money to try to invest it into other places. And at some point, the bank is going to be like, we can't fulfill your withdrawal requests. That spikes fear. And then that's when more people start pulling out, especially when you have big players that put their money in with you. Producer price index also came out, and that is what measures inflation on the wholesale level. That decreased by 0.1% in February and is now at 4.6% year over year. So this is a good sign for businesses and manufacturers, as you know, the prices for the wholesale side of things start to come down. We are seeing consumer price index come down as well. Remember, it's really just that lagging shelter cost that makes up about 2% of what the total consumer price index really is. So if essentially when the shelter costs come down around May, when we start comparing it from last May to this May, we could see consumer price index really jump down to about 5%, 4%. Right now it's at 6%. So we'll see that really take a dive down. Home construction picked up in February. Housing starts were up 9.8% from January. So that headline number, you see that, you're like, yeah, perfect. But most of that is for multifamily units. Okay, single family housing starts were only up about 1.1%. So we're still down about 36% year over year. But I say this because this is just another sign, right? That we see it all the time with BlackRock and these other institutions that are buying houses and renting them out. But this is another sign on how the powers that be are trying to turn America into a renters nation, basically, even with home ownership already as low as it is within minority communities. I mean, we're at the lowest that we've pretty much ever been, even before redlining was a thing. So the National Association of Home Builders came out with their housing market index, and we're now at 44. Remember, their rating is from 0 to 100, where 50 is the midline and signals expansion. Anything below signals contraction. Housing market index bottomed in December at 31. Okay, so in December we were at 31. We are now in March and we're at 44. We've since been increasing. I think that we're going to see that expansion number 50 plus probably by the summertime. I also think that when it comes to interest rates, if we do start to see the effects of these banks just start to crumble one after the other, and this is not just one seismic event happen, we can see rates come in the fives much sooner than what I expected, because I expected the end of towards about mid to end Q3, which would have been about July, June, July. I always said mid to late this year. It could be a little bit sooner than that if these events continue to happen, because we're going to see people start to invest more in bonds and put their money into there, right? It's just about money comes from one place and goes into another, right? It's basically what you're looking at. The stock market is down because most of these banks are within the stock market, right? They're publicly traded companies. So where's the safest place to put your money is typically through bonds, because that is insured by the government. The US always, pays their debts, basically. That's basically where people will start to shift their money in bonds, and including mortgage-backed securities, right? Because mortgage-backed securities were made because they are considered the safest bet, right? People don't really just give up on their homes or stop making their mortgage payments unless it's something like 07, 08. But other than that, mortgage-backed securities have always been pretty much one of the safest investments you can make besides the U.S. Treasury bonds. So we'll start to see that money flow into there if we continue to see more news like this. There are more programs coming out in terms of down payment assistance to be able to help utilize for other clients that may not be hometown heroes. These are some that we've had before, but ever since the volatility with interest rates, they've kind of just taken a back seat because they haven't really been giving funds out for them. So I'm going to be sharing my screen now so you guys can see. So we all know the Miami-Dade one, the $15,000 just came back about a month ago. But these are basically grants, right? And so they work with, I believe they're 5 years, 5 years, and then they every year that you stay there gets deferred 20%. So after 5 years, it becomes fully forgivable. Now, in the past, we had these 2020, 21. The difference was that they were much higher priced on interest rate than the second mortgages were. So at that time, I was telling clients, hey, you might as well take the second mortgage because it's 0% interest anyway. $10,000, you just pay that back whenever you refinance or sell the property, right? But just a little bit more options that we can kind of be able to put people in if they need it, right? Because right now it's primarily, besides the Broward and the Miami-Dade, which are for low to moderate income borrowers, right? If you're talking about higher income borrowers, we may have to do these in-house products, right? So the first one that you guys know of course, is Hometown Heroes. That rate for today is, let me make sure that this is refreshed here. I don't know if I did it before. Yeah. That rate for today is about a 6.125 on FHA, USDA, VA. There's 34 million left. They are saying that they are going to be getting more money and going to be adding on to that. So we shouldn't run out, but I tell clients we don't know that until it happens, right? So we might as well just look at 34 million for right now.
I'm sorry, Mike, quick question. With the Hometown Heroes, are we closing a lot of those transactions here in South Florida?
Yeah. Oh, you're asking? Yes. Yeah, pretty much. Last month, most of my loans were Hometown Heroes. Yeah, there's a lot of people that are utilizing this program. It is the best down payment assistance program that's out right now. That's the most lenient, as long as you're within the occupation list. They're giving that 5%. That's covering a lot for people. to be able to
And you're
cover.
stacking that with other loans?
You can technically you can stack this with a grant, right? Because a grant means that it's not repayable at all. The problem is that right now we're not really seeing the existence of a grant. We're seeing a second mortgage that turns into a grant, and that's really why it's not stackable. So, for instance, Broward County is technically a grant after 15 years, right? Broward County Home Buyer Purchase Assistance Program. But for the first 15 years, it's considered a second mortgage, and every year a little bit gets chopped off. But
Right.
because it's a second mortgage, and you have another second mortgage, you can't stack it. None of them are going to actually subordinate. So that's the issue that you have. You would have to get a grant. That's something that's completely forgivable from the beginning. This is, $10,000. This is $20,000 that you do not have to. You can sell the property tomorrow and you don't have to pay it back, and that's very rare right now.
So the ones in Broward County, the different cities, do you know Suzanne Weiss?
Yes,
So that's that you can't utilize. You can utilize her, but then you can't utilize something else.
correct, because they're a second mortgage.
Right.
So that we have that Hometown Heroes. We also have Florida First Conventional TBA program. So this is for specifically conventional borrowers, obviously. Fannie Mae, over 80%. That rate for today would be at a 7.5%, and they give $10,000 down. It's very similar to the bond, which is why if I have somebody that's below the bond income, I'll use them because that rate on the bond is a little bit lower. The difference between the two is the way that they calculate their income, which is pretty important. Especially when you're looking at down payment assistance programs. So the bond does household. So if you're one person on the application, but you have a wife and she makes $50,000-$60,000 a year, we're going to have to count that if we do the bond, and that could disqualify you. The conventional TBA only does whatever's on the 1003. So even if you do have a spouse, you won't have to worry about, as long as they're not on the application, utilizing them. So this gives me a little bit more flexibility, but there's still income limits on this. It's just whatever I put on the application. I believe the income limit is about 108,000 for 1 to 2 person, and 116 for 3 plus. So we'll have that one, but this is the one that's recently come back with pricing here. This is a grant, basically gets forgiven after 5 years. So still technically a second mortgage that every year 20% falls off of what you borrow. They have 3 different options, 3, 4, 5. Right now, they don't have, you can see there, they don't have if it says NA, that means that they're not utilizing those funds, okay? So they don't have an option for 5% right now, probably because that rate would be too high. If you're talking about from 7.3 to 8, this is probably gonna be at about 8.5, 8.6, and people are really not gonna take that for 5% down payment assistance, right? But they did have that before. All of these were filled out. This is for people that are 80% and below. 7.3, they would get 3%. And 8%, they would get 4% back down payment assistance. And then if you're using Fannie Mae's, over 80%, this is for only, by the way, for conventional. There's going to be another one that's FHA that we're going to go over. Theirs is not open, but as soon as theirs is, we'll start talking about them again. So right now, if you're over 80% area median income, you're a higher income borrower. Right now, they only have that 3% down option. It's going to give you that money back. So it depends on your purchase price, right? If you're at 400, that $12,000 could make sense for you to help you. You take the 7.625 as opposed to 10,000 with a 6.75, assuming that you can qualify for both. Usually we try to lean towards the bond because it is the best option for interest rate. These rates are typically higher because this money is forgivable. It's not going to have to be paid back as long as you don't do anything for the first 5 years. So what they're going to do is, or what they do is, hey, we're going to give you this free money, but you're going to pay it in your interest rate. That's basically the gimmick, right? And that's how it works when it comes to these programs, and specifically through eHousing and Florida Housing Finance Corporation. You're taking the higher rate, and then that money that you borrow is going to be forgiven. And then the other one that's not out yet, but either way, I'll show you guys since we're on the topic. The other one was conventional. This one's FHA, and this one's not for all of Florida. This is for Lee County, Broward County, Charlotte County, Collier, DeSoto, Palm Beach, Sarasota, St. John's, and Volusia counties in Florida. Okay, so most importantly here, Broward and Palm Beach is what we're typically looking at, right? Maybe Lee County sometimes. But this was also available before, right? You would get that government grant, FHA, VA. So this would be the government option here that you'll be able to utilize once the pricing actually becomes available, which we're going to see. I'm mentioning this to you guys now because I believe as rates come down, we're going to start to see these things again more and more prominent like they were before. We never typically use the grants, like I mentioned, because of the fact that, hey, you can use the second mortgage and 0% interest and you pay back the $10,000 and you get a much cheaper interest rate, right? But I think right now could be maybe a different conversation, because if you decide to refinance in, let's say, 2 years, if you're borrowing $10,000, that difference that you pay in interest, right now we can start to calculate that for the client, right? Let's say on the higher one, on the lower one, you're getting a 6% FHA, $10,000, but on the grant, you're getting 6.5%. What's the difference between the two payments, that 0.5% for the borrower? That's maybe only $2,400 within 2 years. Maybe the grant's going to be the best option, because by that time, most of their money is going to be forgiven, right? So different things like that. But I wanted to show you because I was looking at it the other day and I saw that there was pricing again. I was like, this is going to be good to bring up, because I know a lot of people talking about trying to get the grants or the money that's forgiven. Those options, they get forgiven much sooner than what you would with Broward, and their income limits are a little bit higher as well. You guys have any questions, any scenarios from last week? We can also look at really quick before you guys go and show you guys the huge increases in rate that we've gotten since the new banking crisis. That's what we're going to call it. So these are mortgage-backed securities. I've showed you guys this screen a couple times, right? We were pretty much down here March 9th, which was 11 days ago. We missed last Monday, so I wasn't able to show you this. Where we were last Monday, I think was the 17th, right? Yeah, we were right around, no, last Monday wasn't the 17th, it was the 13th. Yeah, the 13th. We were right around here. But since March 9th, that news of Silicon Valley Bank came out, and we've kind of just taken huge hits upward, and the 10-year has gone down below 3.5 again. Today it's opening up pretty well. Today mortgage-backed securities are not doing so well, but that's fine. We typically, if you see something like this, you're going to see some sort of retraction at some point. But we've made some good progress. If this news starts to come out even more, another bank. I know that there was one was it First National that got saved by a bunch of other banks. If that one were to fall off in the next 120 days, you're going to continue to see this thing go up, which is good for mortgage rates. But with the counter of what's going to happen, obviously, is job losses, recession becomes much harder for people to get jobs. The initial jobless claims, I've been looking at it, it's not changing. So people are still not filing for unemployment, but the people that are unemployment are staying on there is what we're seeing. So if initial jobless claim starts to take up, we'll start talking about that again. But for the most part, it's been pretty flat. Any questions, any scenarios?
Good morning, Mike.
Good morning.
Can you quickly revisit the screen where you were talking about the Lee County and Broward County, Palm Beach County, the down payment assistance?
Yeah, you're talking about the counties that it covered?
Yes.
So this would be the grant one, the one that's forgivable after 5 years. Lee, Broward, Charlotte, Collier, DeSoto, Palm Beach, Sarasota, St. John's, and Volusia counties. This is specifically for if we were to try to see if a client wanted to do that grant that's forgivable with the higher rate. Typically, though, let's see if this thing gets out of my way here. Am I able to move it? Oh yeah. Typically, though, we would try to do these, especially if they're Fannie Mae or they're below the bond, because this is for all of Florida. So this is for every single county. This is pretty much the same thing, except it's $10,000 whether we do this one or this one. The other one's only if we're doing a government FHA loan and we want to do the grant. But if they're conventional, we're probably going to be doing the Florida Housing Finance one.
So this isn't stackable with the Hometown Hero?
No.
Oh.
If it starts off as a second mortgage, it's not going to be stackable, and a lot of these are. The completely forgivable ones are like maybe like NACA that people get into. That's a grant that takes them about 6 months to get approved for. That could technically be stacked with a second mortgage, because now you have one that's forgivable that's not going to influence your loan to value. And then the other one, the second mortgage, is going to influence your loan to value. That's really the biggest thing. right? Because there's a certain maximum LTV that you need to be at, even by guideline standards that you can't pass. For standard loans, FHA, you're at about 105. If you're doing a condo, and this is a conversation I'm having with a lot of people right now, because if you're under 80% area median income and you're trying to get Broward to help you with down payment assistance, what people kind of miss in this, in that is that you're most likely looking to get a condo, right? You're 80% area median income or below, you're most likely looking to get a condo. And what happens is a lot of those condos may not have reserves. And it doesn't matter what I do, it doesn't matter how much money Broward gives you, we still have to follow guidelines because that loan still needs to be sellable no matter what bank or what lender you go with. And on a limited review condo, the minimum down, even with the second mortgage, is 10%. So that client, even though they're 80% area median income, even though they're getting down payment assistance, will still have to come out of pocket 10% of their own funds plus closing costs. Okay, that Broward County funds, it does help. It helps with DTIs. It helps with the fact that if you're getting, $50,000-$60,000 from Broward, it's a 0% interest, and that second loan is going to help you minimize your first loan, right? So while your first loan may be 6% interest, imagine you were borrowing $150,000 at a 6%, but now you're only borrowing $100,000 at a 6%. That's going to lower your payment. But either way, your loan to value will not, if you're doing a limited review on a condo, even if you're getting the full amount in down payment assistance, you cannot pass 90% loan to value. So as a client, you will still have to come in with 10% plus closing costs. So that's specifically on the second mortgages. That's why it's so important to understand the difference between the grant and the second mortgage, because the second mortgage will influence your loan to value. You guys have any other questions? Nothing? Okay. Well, we'll be here. I'll be working this week. I know some of you guys have kids. You'll be out and about. Anything that you guys need, let me know. And we will definitely see you next Monday, okay?
Thanks, Mike.
Thank you. Bye. Have a good week.
Bye,
Thank
Mike.
you.